Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. Let us start the new year with the Asian session live market analysis. Good day, Sandra. Thanks for confirming the sound. Asian session live market analysis on January 3rd between 5 and 5:30 GMT. So I take this opportunity to wish you all very happy and profitable New Year 2011. So we have seen last year with a lot of uncertainties and extreme moves in some of the pairs, etc. So what do we have in the store for the new year? So let us just make an analysis for today, and then subsequently probably I'll give a brief note about what you could expect during this particular year, or at least the early part of the year. So let us use the live market quote page as the tool for our analysis. I'll give the link for the same, and I'll also focus the camera over that of the live market quote page. Currently, Euro is trading around 1.3293, 1.3295. The low was 1.3276, the high was 1.3362, and 92 pips negative net change is seen. During the start of the Asian session, there was a quick drop in the case of Euro from that of Friday close. And all the rise which was awaited during last week, they did it only towards the close of the year last week, and finally they gained about 150 to 160 pips in the case of Euro and about 200 plus pips in the case of GBP. So little bit of uncertainty was cleared at the time that the players wanted to rise the market after accumulating the buy positions. And today for the new year beginning, they have made the drop in the case of Euro about 100 pips, and in the case of GBP around 70 pips. So currently GBP is trading around 55.41, 55.45 area. 55.34 is the low, 55.82 is the high, and on Friday it was trading above the 1.56 area. Then in the case of yen, it came to that extreme level of 80 and then subsequently gained the levels in a very nominal way, currently trading around 81.23, 81.26, 80.95 is the low, 81.36, 38 is the high. 11 pips positive net change is seen from that of the Friday close. So we can understand that Euro and GBP, they made a big drop, but in the case of USD yen, they made a nominal gain. This again just to make a downward move. In the case of the crosses, you come across the yen crosses already dropped about, in the case of Euro yen about 52 pips, in the case of GBP yen about 36 pips. And also other yen crosses have made the drops. Then in the case of Swiss franc, they took it to 0.93 area as the year-end close, and then subsequently they are gaining the levels, but a nominal gain of 8 pips is seen in the case of USD. CHF currently trading around 93.51, 93.54, 93.22 is the low, 93.68 is the high. So they are consolidating here around that of 93 area. When Euro has dropped about 90 pips, CHF has gained only about 8 pips. As a result, you find that Euro CHF has come to 1.24 area again. So they are trying to accumulate the positions here and then quickly gain the levels to book profit and again come back to that of 1.24 area. So you find about 76 pips drop has been witnessed in the case of Euro CHF. Then similarly in the case of Euro GBP, when Euro has made about 90 pips negative net change, GBP has made about 67 pips negative net change, lesser when compared to that of Euro. And Euro GBP has gone up and it is trading around 85.50 area, 85.44 is the low, 85.91 is the high, but still 23 pips negative net change is seen. So they closed it above 0.86 for the year end, and then subsequently they have started making the drop by making less drop in the case of GBP and more drop in the case of Euro. So they are handling to start with the crosses, which is very well confirmed by that of the negative net changes in the case of USD CAD and Australian dollar. So USD CAD 99.14, 99.18 are the current levels. 99.18 is the fresh low for today, and they have broken the low, and the high was 99.51, so it is trading below parity, and 63 pips negative net change is seen. When yen and Swiss franc are showing positive net change as the USD weakening move, Canadian dollar is showing the USD strengthening move. Canadian dollar is showing USD weakening move as a contrarian move. And in the case of Australian dollar, they closed it around 1.0250 area, and they dropped from there, currently trading around 1.0205, 1.0208, 1.0181 is the low, 1.0252 is the high, 25 pips negative net change is seen. We know very well when both the commodity pairs show the negative net change, that means they are busy handling the crosses. There is no point in taking positions in the majors. So this is how your trading decisions are to be made, and probably you can identify the crosses which are being extremely sold out or extremely dropped or extremely gained. Then accordingly you can take the positions. When they have made extreme drop, then afterwards they have stopped cutting the low, then you can take a buy position in such crosses. And or if they have made an extreme rise and then stop cutting the high for more than 30 minutes to 2 hours, then you can take a sell position in the respective cross. That way you can identify whenever you come across the contrarian moves with regard to the commodity pairs. So this is how they handle the majors and the crosses. And if overall USD gaining and USD weakening moves are seen, then you can try to take positions in the majors. Otherwise, you have to wait for them to make either the USD weakening move or the USD strengthening move. Then subsequently you can take the positions in the major. Otherwise, you have to focus on the crosses whenever they are making the contrarian moves. So a typical contrarian move they started for the year beginning itself. It shows that they wanted to do more and more of a contrarian move in this particular year, and you'll come across during the course of this particular month how they are making contrarian moves very frequently in order to give more focus towards that of the crosses when compared to that of the majors. Now you come across a very peculiar condition that Canadian dollar is trading similar to that of the Australian dollar, below that of the parity, and Australian dollar is trading similar to that of the Canadian dollar, above that of the parity. But understand that Canadian dollar is a denominator currency and Australian dollar is a numerator currencies. They are just made the reversal of it with regard to the levels. So in the case of Euro and GBP, they are holding and they are not dropped very big afterwards last year, and they are expected to gain more levels in the case of Euro and GBP and also the denominator currencies. Before that, they are just holding at the lower level in the case of CHF and yen, and in the case of Canadian dollar, they are just making the extreme downward move. Probably they can make another 50 to 100 pips downward, similar to that of the Swiss franc, and then subsequently gain the levels in the case of Swiss franc and slowly gain the levels in the case of Canadian dollar in order to handle their crosses as well. So they try to see that every cross is being handled in an extreme way, thereby they are able to induce the traders to liquidate the long positions or do extreme short covering. So that is the way they play the game. So we should be prepared for that, and we cannot think that simply they will make the swings on either way so that we can easily trade and earn money. And if we try to hold the positions, especially during the month end and also the year end and also the new year beginning, then you might find that it's really frustrating. So during such times, it is advisable to do the swing trades rather than that of the position trade of holding the position for a long time. So let me go back to that of the PowerPoint presentation and see what could happen during this particular day. So this is the expected call derived from that of the algorithm, and it may happen or may not happen. So you should be prepared, and this is only a guideline derived from that of the algorithm or a statistical analysis. So during the Japanese session, swings are expected. So you could come across either way swings without breaching much of the high or the low. And during the European session, a quick dip is expected. It might be about 30 to 50 pips during the start of the European session, or during the late Japanese and the European session, the gap time and the European session, they could make the dip and suddenly create that uncertainty and then firm up. And again during the US session, a dip is expected and then rise. Rise could seen. So it is year beginning and also the month beginning, the week beginning. So you will come across more sudden volatile moves happening in the market, and so you should not become afraid of such volatility in the market. And they are all actually trading opportunities. The players just create such big moves to attract the traders to start with. So you should be able to find that there will be value buying from many people, and sometimes those who are holding the positions, they could liquidate it out of fear. So you know that fear is the first enemy for the traders. So you try to get rid of that particular thing. Otherwise, you'll continue to do wrong trades. So during the new year, try to see that how much of fear you'll be able to control. That will be able to really facilitate you to do very good trades. And in the case of the initial lows and the highs set for today, Euro, the low was 1.3276, which is intact, and 1.336, the high, which is also intact, and they are not breached the low of the high. Then in the case of GBP, again the low 1.5534 and 1.5582 is the high, and both are intact and they are not breached. So you can understand that swings are happening in the market. Then in the case of CHF, 0.9322 was the low, which is intact, and 0.9368 is the high, which is also intact. Then yen also, 80.95 is the initial low and 81.38 is the initial high, which is also intact. And Australian dollar, 1.0181 is the low, 1.0252 is the high. Both are intact. The market is making swings, excepting Canadian dollar, 0.9931 was the initial low, and they breached the low and formed a new low, 0.9916, and the high was 9951. Excepting Canadian dollar, you find all other currencies are respecting the initial lows and the highs. So in the case of Canadian dollar, they made a brief downward sharpen, and they could, if they could come above that of 99.31 and stay above there for more than 30 minutes, then there is a scope for it to go up. Otherwise, they will be hovering around this particular area and try to induce the long holders to liquidate their long positions for the year beginning, and then subsequently gain the levels in the case of Canadian dollar. You know, Canadian dollar is relatively thin volume currency when compared to that of the rest of the currencies. So obviously we know that on a daily basis they make a downward stopping as well as an upward stopping. Whereas in the other currencies they try to do in one session only a downward stopping in one session and an upward stopping in another session. Whereas in the case of Canadian dollar they can do it in the same session itself because of thin volume condition, and also to handle the respective crosses. So you have to keep in mind that Canadian dollar can make either way stoppings on a daily basis. So as a result, you come across it has made the downward stopping, and probably within the same session or in the next session, they could make an upward stopping as well. So it does not indicate whether USD weakening move or USD gaining moves are going to be seen today. Let me minimize the PowerPoint presentation and take up the questions which are asked here. No question asked so far. Let me focus the camera over that of the live market quote page. I don't find any question being asked, so let me review this particular live market quote page at the moment. So currently Euro is trading around 1.3295, 1.3297, probably short of the psychological level 1.33. And on Friday you would have noticed that when they reached 1.33, quickly gained the levels to 1.34 area. So that is how they make certain levels as the non-trading zone, and some people may call it as there could be a retracement to those levels before going up further. So probably they will be able to convincingly answer to that particular mystery why suddenly Euro has dropped to fill the gap. They have made the drop, but basically they have made the drop in order to make volatile move on either way. So they have come to the psychological level below that of 1.33 and they are attempting to go above that, but still they are expected to do only swing in this particular session. And later on, after a quick drop, probably in the case of Euro, they could make a drop because GBP also they can make it. You know that is a currency is being used in order to create the market sentiments. So once they make a quick drop in the case of GBP, then you will find everybody will become bearish and then suddenly they could make the reversal move. And also when Euro has not dropped in tandem with that of GBP, immediately people will think that it is better to take sell position in Euro so that will also make a drop, but they will absorb all the sells and go up. So that is the main reason that they drop in a varied conditions in Euro and GBP. So they don't simultaneously make equal pip of drops in the case of Euro and GBP. They make it in a varied condition in order to handle the crosses and also trap traders, create the wrong signal to that of the traders as frequently as possible so that the traders can make distress trades. So those who are focusing only on the currency in which they are trading, they will be vulnerably caught in the market, and those who are analyzing the market overall with regard to the majors and the commodity pairs and also the crosses and try to understand what the players are trying to do it, a simple tool could be the net changes. When you use the net changes, you will find that you'll be able to easily read what they are trying to do it, whether they are doing a USD weakening move in all currency or USD strengthening move in all currencies or contrarian moves. These are all the possibilities. And with regard to the contrarian moves, they can do the contrarian move with regard to the numerator and the denominator of the majors or sometimes the commodity pairs. Whenever they do the commodity pairs, the contrarian move, understand that it is only that nominal move they wanted to do it. But in the case of majors, if they do the contrarian move, that means they could extend it for the day or for at least 2 sessions. In the case of commodities, when they make such moves, understand that in the case of Canadian dollar, for example, they breach the low and come below that, and you come across 59 pips negative net change, and in the case of Australian dollar, 27 pips negative net change. Both are showing negative net change, which is a contrarian move because USD CAD is showing the USD weakening move. Australian dollar is showing USD gaining move from the yesterday's or Friday close or the year-end close. So what it implies for us. So in the case of Canadian dollar, they showed more net changes when compared to that of the Australian dollar. So since it is a contrarian move, they do not want to do more. They will not make 100 pips drop in the case of Canadian dollar, or they may not drop further big in the case of Australian dollar, because they respected the low in the case of Canadian dollar during this. In the case of Australian dollar, 1.0181, which is the initial low. Only in the case of Canadian dollar, they breached the initial low of 0.9931. That means that this contrarian move is only a short-lived move, and they are expected to reverse it afterwards. So you'll be able to just make a note of this analysis and try to see whether it is working for you. Then you can make use of it in your daily analysis of the market. Let me check whether any questions are asked. Okay. There are some questions, so I'll come back to the other questions. Let the live market code page being displayed. David, what is your... Okay, then, yeah, sir. What can we expect of the January? Now, with regard to the new year, the forecast algorithm says that we could come across the other majors gaining. So that is, Euro and GBP are expected to gain further for at least 2 months. That is January and February and early part of March. Then subsequently you could come across them falling in a big way. For that they have to first of all gain. If they are not gaining in January and February, the fall will be restricted during the month of March. Obviously, you will not come across subdued moves in the market. Hopefully, you will come across about 500 to 1000 pips moves in the market happening as we have seen last year. So, if such moves happen in the market, we could come across January and February triggering the market or Euro and GBP to go up, and early part of March there could be a very big upward extended move and then subsequent drop. So I'll just give it for the quarter. Then later on we will see how exactly these moves happen in the market. So in the month of January, I'm expecting the numerator currencies to go up, and obviously you will come across the intermediary falls in the market, and those intermediary falls may not be very big falls. So still you could come across Australian dollar trading above that of parity, and also Euro and GBP not losing that levels, and they are expected to gain more levels in coming days. Then David, what is the projection for Australian dollar? Australian dollar is going to be in the parity level, and Canadian dollar is also expected to trade above that of parity after a brief downward move below that of parity for about a few days. Then May, beginning the first and the last week volatile moves, beginning second and third week falls week. Yeah, there is the first and the last week of every month we will come across the volatile moves on the first day. Then from second week onwards we will come across week beginning false move. That is, the week beginning, either they could do it during the Japanese or European or US session. Any one of the session or sometimes 2 sessions they could do, and that move will indicate what could be the type of move sorry, they could make during the rest of the days in that particular week. Then Jan Toku. Extremely sorry, very bad throat. Will you kindly put initial values on the blog again? Okay, I'll put it because see, I have given the method of noting down the initial lows and the highs, and I want the traders also to spend some time in doing this sort of analysis rather than me doing the spoon feeding. So initially I have given that, and also explained when exactly from the live market code page those levels have been taken. So every time I have to give it, I don't mind giving it, but that will make you lazy. You will not be able to think about the market. Unless and otherwise you develop the ability to think about the market, it is extremely difficult for you to trade. You will blindly take positions based on somebody's call. That is a wrong attitude. You should be able to get convinced and then try to take it, and you stand by that. I don't mind giving the initial lows and the highs, but you should be able to make a note of it from that of the live market code page or from that of the chart, whatever you see, and also related to that of the live market code page. Suppose you are not able to watch during Japanese session, you can watch during the European session. Then you might know that the high or the low might be breached. Anyone might be breached during the European session. then you know that high will be intact and you can just see it in the respective chart and also note down what is the initial low there. And in case if you ask in the chat, in the blog, I'm willing to give it and try to make an attempt of noting down. I will give it for today, but subsequently I request all people to make note of by themselves, because you will find holding the hand might be comfortable, but that will not give you the self-confidence. And balanced, it seems they are handling the majors with a 90 pips net change in euro and now handling the crosses mid-session. Majors should continue to to be handled late Asian. Yeah, they are expected to do that. Normally during the early and the late sessions they handle the majors and mid-sessions they handle the crosses. So you come across the contrarian moves happening there. And then they will come back to that of the majors because they cannot do all the time the handling of the crosses, an extreme downward move or an extreme upward move. Now you find that euro slowly come up above that of 1.33 and you find that order has become black. So that means they kept the order buy order there. So creating certain amount of uncertainty. Afterwards they are just slowly gaining the levels. But still, I'm not expecting them to make a very big rise during the Asian session. Probably from European to US session they could do it. Then Asimat. May I know when does the event start? What is it? I don't understand Asimat. The webinar starts by 5 GMT. And you can ask questions anytime during the webinar. I am willing to answer to those questions. It is an interactive session. Then which pair you feel will dominate the currency market? And see, there is no question of any currency which is permanently dominating the market. On a daily basis, you will come across some currencies become very extremely strong, some currencies losing and become extremely weak and things like that. There are so many days we have seen that CHF was the weakest currency and also yen was the weakest currency, not last year, year before last year. Then subsequently we have also seen Canadian dollar become the weakest currency and now you find the strongest currency. Alternatively, the currency's strength and the weaknesses will be exposed in the market. It doesn't mean that they are going to be a permanent conditions of those currencies. So from time to time you will come across this sort of moves in the market. Currently Australian dollar they are taken into consideration to make extreme moves. That is why it is holding 1.02 level. It is not the intrinsic value of Australian dollar, but they are trying to do it like this. And at every time they try to catch hold of some currency and continue to buy like a carry trade and then suddenly drop it. So whenever they make such extreme moves, avoid taking positions in such currencies rather than trying to do a speculative buy and sell trade there, because it might look interesting to do a simple buy and sell trade at you'll be able to get quick profit, but suddenly when you're caught at the wrong side on the higher most level, a buy position, then you will find that it will take at least 1 year to come back to those levels. So then you will be, because most of the traders have got a tendency to trade without a stop, and they are trying to attract such traders to do this sort of trades, swing trades, and then finally erode all their account. So many people lose their accounts because of such attitude. Wherever they come across such sort of highest level momentum in the market, they immediately enter into such pairs. Similarly, many of the traders enter into that of gold trade, crude trade, silver trade, etc., where the extreme moves are seen and suddenly they are expected to drop it in a very big way and they may not be able to withstand with a lesser equity. So that is why I always recommend to that of the small traders to focus only on Euro and GBP. You'll come across continued volatility. Even if you hold it for a day or two, you'll be able to see profit. But in other currencies, if you try to do it, it will be making one-sided move, and if you are caught on the wrong side, It might take several months for you to see the profit, and you will be simply longing for the moves in the market in your line of expectations, but it may not happen, and it will make you really frustrated, and it will not allow you to take any further trades. So focus only on Euro and GBP. You will be able to really make good money from that of the market. This is my humble advice. Do you feel we may go back to carry trades of last decade? No, carry trade is nothing but the one-sided buying or one-sided selling, and this is not new to the market. The terminology is new, carry trade, and I call it as one-sided move, and the players simply say that others are taking the carry trade. It is not others, it's only the players are doing it, and there are some people who find the going is good, so they also try to take positions. But if they want, the players can trap them very easily, but they don't, because they want them to overtrade and finally trap them. So understand that carry trade is one of the terminology, but I call it as a one-sided move, and that is, say for example, in the case of CHF, from 0.9798 area, they made the continuous drop without pullback. That is a one-sided move, and you may call it as carry trade. Then subsequently you will find the rise will also happen like that. In the case of denominator currencies, this sort of moves are very, very common. That is one-sided rise or one-sided drop for several days, very, very common. But in the case of Euro and GBP, because more volume is there will be a lot of traders holding short positions. There are a lot of traders holding long positions. So the players can easily make an upward move or a downward move and earn money from them. But in the case of the crosses, in the case of the denominator currencies, when CHF has come to 0.93, nobody will take a sell. Everybody will try to buy. Then the players have to necessarily make drop, induce them to liquidate and then make the runs. So this is what happens with regard to the denominator currencies, because the volume is relatively less when compared to that of the numerator currencies. And that sort of trades normally is not seen in the case of Australian dollar. They make volatile moves on either side. But now this time around, they wanted to take Australian dollar to an extreme level, similar to what they had done it in the case of Euro and GBP last year, last year. They took Euro to 1.60 area, and then previous year they had taken GBP to 2.11 area. Similar to that, Australian dollar, they wanted to take it upside this time around, because this is the only currency wherein they have not shown the extreme moves for nearly 25 years. So they wanted to make this as an all-time high, and you will come across the multi-year highs. So during such time, they will try to focus on such currencies and try to make some extreme moves. Otherwise, you don't come across in numerator currencies the carry trade. Then which pair will be the lagger? I don't think that any pair is going to make a subdued move in the market, and all currencies are expected to make very good volatile moves in this particular year, and especially the denominator currencies are expected to gain the levels. That means yen could quickly go to 85, 86 area, and CHF could go above that of parity, and also that of Canadian dollar going above that of 1.03. These things will come across very soon. Don't think that they are being kept at the extreme level for a long time. Even though last year they kept Swiss franc at the extreme level for a long time, and also Japanese yen and Canadian dollar only made on the last few days of the last year, and they are expected to make the reversal of them very soon. But Australian dollar could gain the levels and stay above that of the parity at least for another 1 month or so. Then FAC. Do you expect continue rises in gold and equities? Yeah, equities are expected to gain nicely in this particular year, and gold is expected to make either way swings, and you will be surprised to see that the commodities ease when commodity currencies are strengthening. So we'll come across in this week a peculiar condition of that nature. And initially gold, silver and also crude, they are expected to ease first. Gold could come to the support of 1335 and silver could come to about 28 level and crude could come to about 86 level and then subsequently hover around from that of the high to low. But still, don't think that sell and buy trade will be very easy there, because if you try to sell, they will try to hold it for a long time and induce you to do the short covering. Then afterwards they will try to drop. So whenever they make an extended move, try to take sell position. Quick rise, then try to take sell position, not when they are holding it. That I explained in my trading system webinars earlier, and they are being linked in the blog page, market reading blog page. Kindly go through them, then you will be able to understand well what is expected USD-Yen in next 3 months. So USD-Yen is expected to gain the levels to 87, and I am very confident it is expected to go above that of 100 in this particular year. Devangan, do you see any time Euro and GBP becoming non-tradable as compared to other currencies? No, because they are the two major currencies wherein you come across relatively larger volume. So they will not kill the volume just by making extreme moves in that. On the downside they make it, or upside they make it, but they don't sustain there for a prolonged period. Okay. Malka, do you think Euro again down to 1.30? I don't think. Even last year, that is December, they are not shown that. And they came to 1.3066 and within minutes they just reversed it. Rupa, Happy New Year. Okay, I also reciprocate, wishing everybody Happy New Year. Regarding GBP, last year from 1.44 to reach 1.62 and then fall to 1.53. So if make more likely to gain levels, is there any possibility? Do you see for further fall before gain? Of course, traders' positions are always. Yeah, obviously, but you may not come across much of a traders holding the pending positions, so they will try to induce the traders to take positions. And normally, you come across big events happening in this particular week, like FOMC minutes and also the non-farm payroll, etc. So they will try to make use of it to bring in volatile moves in the market. And it's very easy because the traders apparently see the trend in the market and try to take position after the rise and try to take sell position after the drop. This is bound to happen in the market, so they can easily trap the traders either way. So, but the forecast says that there will be swing and rise moves in the case of Euro and GBP and also the denominator currencies in this particular month. In TDP, do you expect today's move will be false week beginning? No, it's a month beginning. So you'll come across volatile move. Either way, volatile moves will be seen, but it will not set the trend. That is the difference between the week beginning false move and that of the volatile move. Volatile move will not indicate the trend at all. Then much of the last year, the players focused on short-term trading. Will they build positions this year so that they can hold the levels for a few weeks? So they already bought after making the drops last year, and this year they are expected to gain the levels and book profit. So I am expecting about 1,000 to 2,000 pip swing happening in the market in 1 or 2 months time. So in a month they could gain about 1,600 to 900 pips or 1,000 pips, and another month a follow-up gain like that. Then subsequently make a big drop of 1,000, 1,500 pips. That sort of moves are expected to sit in the market, and that alone can bring in more volume to the other market. If the moves are very, very subdued, the market volume will gradually dwindle for the simple reason that not many of pending positions will be there in the market to trigger big moves. So they can hold the levels for a few weeks or months. So they're expected to gain the levels for 2 months. So what they accumulated last year, and they are expected to just liquidate by quickly gaining the levels in these coming 2 months. Any idea about euro trading up or down? I explained that euro is expected to trade upward. So dips are buy opportunity, but you have to always see that when the low has not been breached for more than 30 minutes to 2 hours, then near that of the low, or whenever they are making a downward stop and try to take a buy position, still you keep the stop or the hedging order to limit the risk. And once the position makes profit, keep stop at entry. Then probably you can think of small swing trade or a position trade or whatever it is. In case if you want to do position trade, expecting a good move, then probably start from next week. This week will be ideal for swing trades. So let me go back to that other PowerPoint presentation. So expected market moves, swings are expected during the Japanese session, and a quick dip and a firm up could be seen during European session, and a dip and rise could be seen during that of the US session. And tomorrow again you could come across very volatile moves happening in the market, and afterwards Wednesday and Thursday they are expected to gain the levels, and on Friday during the non-farm payroll release they are expected to make initial volatile move and gain significantly in the case of euro and GBP this time around. And before the by the start of the day itself, they are expected to gain the levels on Friday, 7th of January. They are expected to gain the levels and continue to gain the levels after the non-farm payroll. So let us do the analysis on a daily basis, and I will continuously note down the initial lows and the highs, and for you to just review it and compare. Excepting Canadian dollar, all other currencies, they are respecting the initial lows and the highs. And also in the case of Canadian dollar, the new low 99.16, what they have formed, they are not breached it further. So you can understand it as a brief up downward stop before making a rise. So Canadian dollar is also stopped making a dip from 62 pips. It has come to about 48 pips negative net change. So I take this opportunity to wish everybody a very happy and profitable new year, and thanks to FX Trade and also you participants for your patient listening, and try to develop patience. You will be able to do good trades in the coming year, in this year. Thank you one and all. See you.